All right, good evening, guys. Happy Independence Day edition, -1. Um, Daily strategy report for July 3rd, 2024. We'll start with sniper trades of the day. Yeah, so Tesla was one of my focus stocks today. I was on 3 minutes for most of the day today. I was well rested. It was going to be a half day in the market. I was hungry. Tesla and Nvidia were my focus stocks, though. So this is Tesla, 3 minute. Get alerted by the big gap. Here's the OR3. If we look at Tesla's real quick for a second here. Yeah. Yeah, we see that the range stat is $10.50. So if we look at an entry around 237, a range stat move from the low of the day, which is here, 234, it should be 245. That a move from here, from the low of the day up to here, would be rational and reasonable. That's sort of the maximum reasonable intraday move. So try to keep that as the idea. And then if we were, so that's the plus range stat, right? It could go that far. And then if we take the high of the day and we drop it down $11, that's 239 to 228. So basically the low would be down here. That would be a minus range stat move. So that means that this space in here is the normal range of the day. So it could go from here to there. It could go from here and end up down there before it became abnormal. Now, if it gets beyond those limits, then all we know is that we're into abnormal territory, and it could be 2 times that. It could be another plus $10 or another minus 10. But that would be an abnormally large move, an irrationally large move. So the range stat helps us calibrate the reasonable moves of the day. So there's the entry. That's the standard R5, I'm sorry, the R10 risk box on Tesla. It scratches right away. It re-enters on a Kata 2 because it held above the VWAP and the PSAR and the Dragon. And then it peaks up here, the R10 that is. So I jump stop from here to there, and then 2 bars later, it hits that stop. 1, 2, about 3R plus a 0. So netting 3 for the day. It's within an hour of the close of the day. So I think that was all I did on that one. Yeah. There were a couple more micro moves in there, but that was Tesla. Here's Alcoa, one of my faves. There's the close. Here's the big gap up. There's the OR3. If I check Alcoa real quick, just for the heck of it. its range stat is a $1.90. So let's see here. Oops. Just making the screen smaller. Sorry. Oh, I didn't put the price on there. Sorry about that. Let's just go into the trade. So there's your OR3 entry with a standard risk, and it gives us about 2R. I take a COTA 2 reentry for a scratch. Miss the short. Really missed the short. And that afternoon grind. I had a positive bias the whole day. So that ends up being about 2R. This is NVIDIA. This is my other focus stock for the day. Here's yesterday's close. This is the 5-day VWAP, the 10-day VWAP, the 150-day VWAP, if I remember correctly. Yeah. Grinding sideways, nothing. Probably Z3 pinch breakdown. I get short on like a new low of the day. And the RL10 turning into the winter. Quick loss of a half. It breaks through the PSAR to the upside. So I just stop and reverse with the same risk box. It breaks through the 5-day VWAP and a 2R battle drill. I second position it. I exit and capture 3. Re-enter on a COTA 2. Second position. Exit for about 2 more R. So that's about 5 in NVIDIA. Check or hold. I like the way that it postured to the end of the day. I think that's going to be getting a lot of attention in the over the holiday press. This is marijuana. I sent out an alert through Patreon this morning. Trader X, our buddy, gave us that look of on a daily basis, a compound critical state that was leaning to the upside. So here's where it closed yesterday. Here was the little quiet OR3 beauty. And again, you can see the, let's see, what's the green one? That's the 3-day anchored VWAP. That's the 30-day, that's the 30-day, and that's the 5 and 10-day anchored VWAP. So there had to have been a harsh sell-off into this sideways. And now the path of return to normality is that way. That's why Trader X said, hey, leaning to the north side. It breaks out of the OR3 about 10 minutes in, put the stop, that's the standard risk box, and it happened to be connected to the Bollinger Band mean and at the PSAR, so that felt normal and natural. I missed a second entry, but I was happy to collect 1, 2, 3. This is after the rollover and the skin of the dragon exit. And I think that's all we did on marijuana today. No, I take it back. We did more. It was Alcoa. It was so I stayed with this one. I tried the COTA 2, quick scratch, micro loss. caught a 2 to the downside. Quick scratch. Caught a 2 to the upside with a crossing of, I treat this as failure to fail further. And it looks like the 3-day anchored VWAP held pretty strong. And this one, after it failed to fail, now price moves up through the Bollinger Band mean, through the VWAP of the day. So why not? And it's a 1, 2, 3 entry. So there's our entry with the standard risk. And that one paid off too. So that was about 4R. And thanks to Trader X for the help. What got his attention, I posted it in Patreon, but if we want to take a quick look at what got his attention. And when he sent it to me, it struck me immediately that I agreed with him. This is daily. Turn this off. Yeah, this was a harsh. This had been a harsh sell in marijuana from 1150. 1, 2, 3. The first urge back to the Bollinger Band mean, which failed back to the base. And if today had broken through the base of the RL10 and the PSAR, that's an obvious short. So the compound critical state here plays to the short side, but then the upside move ended up giving us 4R in just inside that little space. And I think it's because it was so closely allied with what had been a support level that all the guys who bought in here and then cashed their profits here were ready to buy again in there. So that ends up giving us 4R intraday and no overnight risk. Check or hold. All right, let's see. This is EWW Mexico. 3-minute. Yesterday's close. Yesterday's VWAP. Here's the gap up in the OR3. Here's the breakout from the OR3. Standard risk, it works right away. That's the characteristic of really good moves. If it was one of my focus stops, I could have had a second position on, but I was working Tesla and NVIDIA closely. But this rolls up. Now, this is always a tell to me. You get large range expansion, then a consolidation with almost like a doji, and then it closes and then immediately starts failing. If you were going to be a sniper, you might just snipe that right there. Especially if you'd gotten a second position in here, that would have been a nice exit. As it was, when the R10 rolls over, I just jump my stop up to the edge of the dragon just in time to catch it on the way down. And that gives us 1, 2R on EWW. Check or hold. Missed a Kata 2. And nothing. I missed the breakdown, but it was already close to the end of the day. I was pretty engaged right in here with Tesla and NVIDIA, which were working, and this one was kind of drifting, so not so much. And then finally, DIA, yesterday's close. Here's the gap up. It rolls up, rolls down, closes here, then rolls over. There's a breakdown to the short side. So this bucked the trend of the rest of the day, kind of. And this one returns half an hour. It originally, this almost looks like dragon horns, but to the maybe dragon feet, dragon claws. So it breaks down hard and then reverses on the way up. So I just cash it there in order to lock in the gains. This is the case where I'm accelerating that stop on a money management basis. It already tested and then reversed above the Bollinger Band mean. So I wanted to preserve the win instead of waiting for the R10 to reverse, in which case I probably would have ended up scratching. This was simply an attempt to capture that piece. Discretionary exit, money management. Caught a 2 short again, almost a collapsing dragon. Loss of a half an hour. Re-entered short, same entry, PSAR violation. Dragon skin exit for an R. And grinding for the rest of the day. So pretty good day at work on a half-day schedule. Did I get this one? Oh, Brazil, last one. Gap up. Yeah, yesterday's close, big gap up, OR3. Next bar is the breakout. It's above all the VWAPs. It's a tight risk box. Half an hour. Caught a 2 reentry, scratch. Caught a 2 to the downside. So let's read the signs. The R30 has rolled over. That's the black line. The PSAR flipped here and has been down. The R10 has rolled over and left the dragon. It just crossed the Bollinger Band mean, and it just crossed the VWAP. So that's as compound critical state as you could want. And this had all morning to try to go, but it did not. So maybe it's this, and maybe it's going to come back to the VWAPs. It does for a moment, for a fraction, but failure to fail and recovery, I get a, what do I call that? I think it feels almost like a COTA 2, but actually it's more of an SSC because it felt like this was the harsh failure. There's not a higher low in here, so that can't be a COTA 2. So this is an SSC, and I'm just using the standard small risk. And if this fails, I'm ready to get short right away. And again, targeting the VWAPs, and especially like that trade because the last trade was to the downside. So on failure, I'm ready to reverse instantly. Grinding, end of the day, squeezed out 2R, just on a drift. Right, let's look at the traders. This is Brian. He gets supported fall crossing. This is the Kiwi versus the dollar on the 5s. Short in the usual way, exit in the usual way for 1. And he noticed a re-entry, which would have scratched. He was already out of the market by the time that happened. So he nets 1. His rolling 30R expectancy is 0.66. The overall expectancy of all 77 trades is 0.66, meaning that he's at about plus 46R on 77 trades. 5 minutes, currency pairs, trading with the simplest possible pattern. This is the gold spot versus the dollar on the fives. He loses one, gains a half, gains 0.4, so he nets minus 0.1, basically a scratch for the day. Not much action on the short schedule. The gold US dollar spot is also cruising along at about a 0.67 rolling expectancy, this one on 44 trades. He's working on his stats roll up and monthly report, and we'll brief that as soon as we get it. Here's Jonathan, and he's working EWW on the threes, OR3 entry. He accelerates and takes the exit here for 3.2 instead of letting it come down to the skin of the dragon, and closes up shop after an hour and says that's a good day at work, so why not? I do not disagree. This is Tim working his version of Tim Clark. He waits for the second set of patterns and gets a quick short and cover for 0.5. The OR3 move in here, and we just saw the EWW move, but he gets the second leg of that. And there was even room for a win at 0.5. He gets 0.4 on Home Depot. He was not able to get the re-entry on this one. There's some, I still think it's some psychology in here. I think premature exit, and then the standard exit for him would be here at the PSAR. The opportunity cost of that was 1.6, so we're going to keep working on that. No hurries and no worries. There was no entry on for his focus patterns on McDonald's, although I do notice, to me, it's in an extreme case. There's your OR5. So that one there, and then the PSAR flip entry is here. Oh, I'm sorry, he got mine. He tried that one short. See, to me, the lower risk entry is this one, because that short is not even exaggerated. That's just a normal move. Whereas here, there's got to be guys that are committed to the second leg. So I actually prefer the earlier entry with less confidence. Let's see, nets 0.2 on this is the leveraged Dow. He gets the afternoon trades. Now, George, this is the auto trading with and it's reflecting a 2R trailing stop. And I still do not support a trailing 2R stop. What I do support is how well this thing is finding your desired entries. And now this is what I mean. So the 2R trailing stop exit goes here. Or no, is a minus 0.4, is actually here, I think. Whereas if you get the rollover, I think you should be able to get out in here and keep your no lose plus dinner for 2. I love the reentry. And at some point, you got 1, 2, 3 rollovers. There's no way that if I've got 3 surges to the upside that I'm going to let that thing go negative and give me a minus 0.2 when at the maximum favorable excursion, I've got more than 1. I've probably got 1.5 maximum favorable excursion up here. There's no way I'm going to let that come all the way back to here. That's probably, if it's a 2R trailing stop, that's a 1.8 favorable excursion. You just can't have that. And then especially letting it cross the VWAP and letting a nearly 2R trade go negative. Now, we're in the early stages of testing this for different exits, but this is why I say its ability, the rule set that you have coded to find the entries is fine. you're getting favorable moves and favorable moves routinely. And the size of the risk box is keeping you in positions and allowing normal noise to permit the favorable move. I believe your exit was up in here because it was maybe running out of time. But there's, in the real world, I don't add a second position here. I've got one position on and it's just starting to work. It's got to get up around 2R before I add a second position. But I also understand that you're checking rule sets. But this is the point that I want to make on the 2R trail. Not a fan. This one, yeah, here's another one that I would just say my habitual rules would not allow me to get long this early. I'm not sure I see the COTA 2 in this. But I mean, if that's the OR3, I don't recognize that as a pattern. I would recognize probably this as a short because you've R10 is rolled over and it's come through a rising VWAP. So I could recognize that as a short. And on my best day, maybe I scratch or I take a 1R loss. But I just don't understand that one. And as soon this thing is failing on the second and third and fourth bars, when it comes down into here, I'm cutting it here, I think, instead of here. Now, I don't mind this as a COTA 2 on this side, but when that doesn't even break through the VWAP and starts rolling over, I think I'm out here when it goes below the Bollinger Band mean and the PSAR, which is a better exit than this one. I love this entry short, but again, this excellent short, which gets more than, it's up around 1.2. Those exit rules allow it to come and fail all the way back to here for minus 0.7. We let a +1 trade go to minus 0.7, and I just can't psychologically trade that. I don't mind this as if I had taken this trade, I want to get out like here because that's where the R10 reversed, and I want to make bank on this. And then I'm ready to take this long. And then when that doesn't work, when it doesn't even get through the Bollinger Band mean, much less the VWAP, and it starts failing, I'm probably out down in here. I would take this one short all day and probably lose and get this here. And then I'd try to be entering somewhere in here and then have to just call it a day. There wasn't much play in DIA, but I do not like letting winning trades that are better than average become losing trades. And that's what I think the 2R trailing stop is doing routinely. This one, now this is a case where first is best, right? See, I think that's a premature entry. I think once that bar closes, you can get in. This is where I want to get in after that first bar has closed. And then I don't know if I have 2R right away. And I would not be putting a third position on that early. But on this entry, to me, on any one of those three entries, when that R10 rolls over, then the exit has to be up in here. So I'm not sure where this one, I'm not sure where that exits, but I think, the exit on that first two should be up in here, and those are fine. I like this as a short because it's crossing the VWAP. I think I prefer this one. I would rather, if I could just take one, I'd rather have that one because it's after the flip and it clearly has no buying interest whatsoever. I really like that one. So I think the rule sets you got coded up for the auto trader catching good entries. And my spider sense is that this would be well served with more of an active active exit management. This is the Bitcoin, huge gap and then no movement. So I like that as like an OR3 and an exit. I like the re-entry. And then if this came all the way down to here, this is where I'm exiting on that one. So here's a case where this one went to 1.7 in your favor, but then the exit is, I guess, up in here. And we let a plus 1.7 become a minus 3.3. And I just don't think psychologically that's sustainable. But again, I'm generally liking the entries. I still think I think this is a premature exit. You know, your opening range is here. So I could see on this pullback and then a rebound, I could see an entry here, but here I don't see the entry. And then I think I'd be getting out in here after the R10 peaks. And I'd like to re-enter here rather than here. And this one, when it doesn't even work, I think I'm out at the PSAR or the Bollinger Band mean, but not, you're in here for 10 bars and it's only positive for one bar. I'm not going to let that. That's not the one to believe in, to let it go the full 1 hour loss. And then I'm wondering, where is my routine entry right here? After 2 weak legs up and it roll the R10 and R30 roll over, crosses the Bollinger Band mean, crosses the VWAP. That says short all day to me, with an exit somewhere in here. So I'll double check your rule set in here. It may be that since you're long here, it won't let you go short, right? Because you're already long from here. It wouldn't let you go short until this thing had exited. And that's another danger of the 2R. This thing ends up being, you exit right here at 0.3. This was at a favorable 2.3. So take a look at what your average win is on this series. 2.3 is going to be well past your average win. And to let that lose 2 full R, which is twice the size of what you were willing to risk. Now I've got 2.3 in hand, and to let that go to 0.3, that would drive me absolutely nuts. I could not sustain that. Then McDonald's, this feels correct. I think maybe it's a bit premature. I think the entry is here rather than there. And then when this rolls over, I'm probably exiting here. And if I put that second position on and it starts failing immediately, I'm exiting everything right there so that I don't lose money on the first position. And so here's a case where this thing was up 3.3 at its peak and it became a 1.3. And this one was up 0.8 and became a minus 1.2, meaning that it lost more than you were originally risking. So I just think there's something suspect in the concept of the 2R trail. All right, let's go to the reports. Market really closed well today. Bullish, quiet, overbought everywhere, favorable volatility. What could possibly go wrong, right? Over a weekend and discussion? Well, we'll see. But we're overbought. No buy on dip signals. Tech is leading the way, Microsoft, Intel. Dow tactical summary, it was just basically good news all day for big players like Apple in tech land, Goldman Sachs in finance, Microsoft in tech, Tesla in tech, big wins in Nvidia today. So after that brief sell-off, it was up 4% today. Big time. Big time goodness there. That's going to get a lot of attention. ETFs was almost universally favorable. And the two most noticeable winners, the Qs and SPY, which also means that XLY was good. XLK is pushing near the top. But it was really the NASDAQ tech getting it done. Lots of auto framers to choose from. I'll let you read that on your own. Many squeezes because it was a shortened day, a low range day. What I love is when the tech leaders are also squeezes. Microsoft, I like diamonds, small caps, McDonald's. The S&P is at 1.9 on the squeeze. That's all good. Postured for a big opening on Friday. This is the TC2000 format for the auto framers. We're sorting by reward to risk. All the goodies that have a long way to go to get back to their 10-day high. IP and McDonald's are easy to believe in. Home Depot, Merck, Qualcomm now this is nice because you get Qualcomm in the semiconductors. It had a big up day, but it still has 2.3 to 1 reward to risk ratio back to the 10-day high. That's kind of it has ground to catch up in the semiconductor and tech space there. So kind of like that. Dominated by summer and spring, all good. Mostly long and strong on the indexes across the board. Just a few areas of measured weakness. Some weakness in Boeing, Merck, Johnson and Johnson, Walgreens and Nike, regional banks, healthcare, but otherwise, long and strong, all of the usual suspects. Tesla, Apple, Microsoft, looking good. The Qs, the S&P, XLK, all the techs leading the way. Let's just take a quick look at our last little. Yep, this is today's little follow through is given a boost here. The R10 Z-score is higher. The 30 rolled up decisively. The 90 is certainly positive after having its tactical pause. And that is as when it's bull quiet and all of those things, you got every possible thing working in your favor. It'll be interesting to see if there's any political fallout this weekend on the presidential race, which is to be uncharted territory, to see how the market responds to anything like that. It's just, I don't know how anybody other than Biden has a chance of beating Trump the way things are shaping out, because it smells of desperation. I think symbolically they have to run Kamala for the principle of it. Otherwise, they look like two-faced carny barkers and snake oil salesmen. It's the only hope I believe they have of respecting the democratic tradition and their stated principles of diversity. How do you not run your vice president? That's exactly what she's supposed to be able to do. And I hope that's what happens so that they recover their soul and we have an honest election. So let's see what happens. All right. You guys have a great 4th. We'll see you on the night of the 5th. Take good care and catch you later.